Hi, good morning, everyone. Welcome to our webinar today. I'm Rob Sealander, Business Development Officer at Nevada Business Opportunity Fund and with the Nevada Women's Business Center. And joining me today is Phyllis Johnson, the owner of PKJ Consulting, which is an accounting business here located locally in Las Vegas. So Phyllis, can you tell us a little bit about your business?
Sure. Good morning, everyone. As Rob said, my name is Phyllis Johnson. I'm the owner of PKJ Consulting. I provide accounting and operational services for small business, including bookkeeping, tax prep, payroll services, HR services, a little bit of marketing. I'm here located in Las Vegas, but because I'm remote, I also have clients located in California, also Arizona, North Carolina, and crazy enough, in Canada. So it's a pleasure to be with you today.
Okay, so how does that work? So you're an accountant, and you just mentioned that you have clients all over. So how does that work for our clients that aren't necessarily in Las Vegas or here locally?
So nowadays, a lot of people are remote located. You're running your business, but everything is cloud-based. So for example, if you have QuickBooks Online, for example, you don't actually need an in-office accountant. Most businesses, such as like restaurants or maybe t-shirt companies or DJ companies, they don't have space for a full-time accountant in their location. So what they're looking for is someone in the back end where they can use things such as Google Drive, Dropbox, now you have Skype, GoToWebinar. You have so many different cloud-based online services where you can be remotely. I can be in Jamaica, for example, and you can be in Africa, and we can still work together to get the job done.
Okay, great. So let's step back just a little bit, because you and I have had this conversation when we first met. What is the difference between a bookkeeper and an accountant?
Okay. So just in my opinion, a bookkeeper is someone who's kind of more just making sure they mark the book. So making sure they do the debits and credits, making sure everything balances, doing the bank reconciliations. Whereas an accountant is more going to be looking at a year-round basis. So they're going to do everything that a bookkeeper does, but in addition to that, they're thinking of tax prep. They're making sure they're offering advice as far as expenses. They're trying to assist you with sales and use forms. They are also possibly your tax person. So they're going to be a little bit more knowledgeable about your business as a whole versus trying to just kind of make sure everything balances.
Okay, and for people that are new in business, or let's say thinking about starting up, or maybe they've been in business a little bit, is there a point where do you start with the bookkeeper and then move on to an accountant? Should you have an accountant from day one? Do you have a bookkeeper and an accountant? I mean, what's kind of because money is going to be an issue, obviously. People aren't making a lot of revenue, especially in the very beginning.
Correct.
So what's the best way to balance that works for everyone?
Now that's a great question because it depends on what type of business you have.
Okay.
Your accountant can also be your bookkeeper. Your bookkeeper can also serve as your accountant. So it really truly depends on what type of company you have. If you are a sole proprietor or LLC and you don't have that much going on, so let's say you're a service-based company where you do marketing for a living, and you don't have a lot of different transactions, you may just need a bookkeeper to kind of come in and help you make sure everything's balanced. And then at the end of the year, maybe you have an accountant do your taxes. Sometimes your bookkeeper also is the person that does your taxes. As you grow bigger, you're definitely going to need an accountant. Definitely if you're an S Corp or a C Corp, you definitely want to have an accountant who's going to help you with the whole big basis of your company.
Okay, we just got a little bit of a technical glitch. We need to face a little bit more this way because the microphone actually is here. Sorry about that. So sorry for everybody who missed any of that. Hopefully it was loud enough for you to catch. Our apologies. So, okay. So how does somebody take that inventory to know where they are and what they need? What's like the best? So if I'm starting my business, how do I really know what I need? Because I haven't done anything yet.
So you always need some type of person with numbers. Now, if you're great with numbers, good. But first thing you should always do is make sure you're keeping track of your money, because it's hard to make goals and plans if you're not doing that. So I would say, if you are a restaurant or something in that base, QuickBooks Online, QuickBooks Desktop. If you're good with numbers, you can keep track yourself. But another way to do it is just start looking for people. Sometimes you don't need a person every single day. So if you're doing, 10 to 15 transactions a month, you have a bookkeeper come in once a month, once a quarter to look at your numbers.
Okay.
And then make sure you're doing everything properly. You want to make sure that you are getting your bank account set up. You want to make sure that you're keeping track of your receipts. You want to make sure that you have all that information, because once it's tax season, it's a lot harder to go back and try to figure out, okay, I wrote this $2,000 check a year ago. What was that for?
Right.
And so when it's time to do those write-offs, if you don't have any proof or backup of it, it's a lot harder to then turn your taxes in and get those write-offs and those benefits.
So you mentioned people who are good with numbers.
Yes.
If somebody's good with numbers, does that mean they should be their own bookkeeper or an accountant, or is there an advantage to...
It's always better to have someone else look at the information.
Okay.
You're so knee deep into your business that you're trying to grow your business. Your goal as whatever you're going to be doing is to grow. And so if you're trying to do your marketing and your accounting and your restaurant, for example, and your advertising and HR, there's only 24 hours in the day. So you can't be an expert at all of the stuff.
Okay.
It makes a lot more sense to spend a couple of dollars to hire someone, because if you're in the knee-deep trenches of looking at the numbers and running your business, you can easily miss something, which at the end of the year can cause you a big tax bill. You may miss sales and use tax. You may miss something. So I have a client who has an accounting degree. But they have no interest in doing their own accounting because they know that it's smarter to have someone else with different eyes. Also, you're a little bit more passionate about your business, so you're going to be looking at things a little bit differently, where someone like myself can be a little bit more objective and say, hey, okay, you're spending, $100 a month on this. Are you really getting any revenue for spending this $100 on these expenses? Whereas with yourself, you're going to rationalize everything that you spend money on.
Okay. You've mentioned QuickBooks several times.
Yes.
And I know that you're a huge fan of QuickBooks.
Yes.
Is QuickBooks the only solution out there, or are there other, or is it kind of the most preferred? I've heard it's an industry standard, and I've heard it's not, so.
It's definitely industry standard.
Okay.
It's just the one that it's world-based, but there's also Xero. There's also, you can use Excel, you can use Quicken. There's a lot of different software programs. If you own a restaurant, there's some that's tailored towards that. If you own a clothing company, there's some tailored towards that. There's also FreshBooks. What ends up happening a lot of times, though, as you grow, you find that some of these smaller software programs can't do everything. Also, as you grow, it may be a little bit harder to find someone who is a FreshBooks expert, for example. Since QuickBooks is the standard, you're going to have people like myself who are pro certified who automatically know QuickBooks. So it's a lot easier when you grow to have a kind of standard type of software program.
Okay, you mentioned just a couple minutes ago, you mentioned Excel.
Yes.
I thought, or at least I think I was told a couple years ago by somebody, that you should never do your accounting in Excel.
You shouldn't in the beginning if you want to, projections and things like that. If you want to, like in the first month, use Excel to keep track before you commit to a software program, that's fine. In the long run, you should never use Excel, just because if you are going to go get a loan, the loan company is never going to accept a spreadsheet from Excel because it's easily to manipulate. If you want to, grow, Excel's good for kind of doing forecasting and things of that nature. You can always take something like Xero or QuickBooks, export it into Excel and do projects with that, but you should never just be using Excel.
Because I heard, and maybe you can clarify this for me, that if a business gets audited, that the IRS will not accept standalone Excel spreadsheets.
That is absolutely correct. Like I said, because it's manipulative. So I can just today go into your bank, download everything into Excel, and then you tell me, hey, you know what, can you just delete $50,000 worth of my income? Whereas with QuickBooks, although you can do it, there is an audit log. So you can see that Rob went in there and deleted this $50,000 income. At the same time, once you do that, it's not going to balance out to what your bank statements are. So that's the number one reason why IRS won't accept Excel.
There are a lot of apps out there that people like Mint and things like that people use in their personal.
Yes.
I actually use one of those. Are there ones out there, or can you use those same ones to also connect in with your business? So as you're out and about and you buy that lunch, or you get gas for your car to go to meetings or whatever, that automatically goes in? Or is there a whole separate sort of stream of processes and things that people need to do to make sure that gets handled?
So there are a lot of different apps nowadays that plug into whatever accounting software that you use. PayPal is definitely one of them. So let's say you use PayPal, you can be out and you want to send a client an invoice while you're having lunch, you can do that. It can integrate with your accounting software. Cool. Actually, QuickBooks has an app that you can use, so then you can take pictures of your receipts. I always recommend MileIQ. And MileIQ is an app that you keep track of your mileage. Very few people actually sit there every day and say, okay, for example, me driving here to come do this webinar. I'm not going to go home and then say, okay, I drove 6.2 miles. I'm not going to remember to do that. But because I have the MileIQ app on my phone, it's automatically tracking it. So, once a week or whenever I have a chance, I have some downtime, I just go into the app and I just swipe left for personal and then swipe right for any business places that I went to.
Okay.
So at the end of the year, when it's time for me to sit down and do my taxes, MileIQ will give you a whole report of here's all the locations that you went to, here's your mileage, go ahead and put it into your tax software, and now you have your backup in case you are ever audited.
So you could even do that. So if somebody, let's say, it was a small business, they had, let's say, 1 or 2 people that kind of went out and did, calling on buyers or that kind of thing. So they could keep track of it that way as well.
And another good thing about that is if you do have employees and they want to submit expense reimbursements, they have the app on their phone, they can attach it as backup as mileage to do their receipts.
Oh, that's very cool.
Yeah.
Okay. I did not know that. That's awesome. So let's see. So if somebody is starting up a business, can you walk me through? So if I come to you and I say, Phyllis, I'm starting up a business, I have a business plan, I have a business license, I need to get all that set up. Could you first tell me, and how would I go about selecting an accountant?
Okay.
Like, what are some of the questions that I should make sure that I ask, so that I know I'm getting the best accountant for me?
Well, first you want to ask about their background. The thing about an accountant, especially if you're a small business, it's a personal relationship. Your accountant's going to have access to all of your information. They're going to know what you spend your money on. They're going to know some of the things that you do that,
Business and
personal sometimes. Because a lot of times when you start up your business, very few people are immediately draw the line in the sand. So sometimes they use their business accounts to do personal transactions. So you want to make sure you have a rapport with them. You want to make sure what their background is. Did they go to college? What degrees do they have? What certifications do they have? Are they someone who continually stays up with education? You may have a bookkeeper who, maybe they have a master's degree and they graduated, let's say, 1980s, but accounting is a lot different now. There's a lot of different rules, a lot of different regulations. So you want to ask those questions. You also want to know what other type of businesses do they serve. For my primarily goal is to work with small businesses.
Okay.
So if you talk to someone who works with, large corporations in town, that may not be the person that you want to work with because they're not going to really understand a small business needs. You also, because you're a small business, you want to have someone who is a little bit more well-versed because your bookkeeper and accountant, you're going to be looking at them for business licenses and kind of anything paperwork that you get. You want to be able to give them that without them saying, oh, I don't know, you need to ask a CPA or this type of person. Then you want to kind of understand their fee structure. That's important, and then see how flexible they are. Like I said, if you're a small business, you're going to look for someone who's a little bit more flexible, knowing that in the beginning they don't have a lot of money. And so that's how I would do it. And then also ask for some recommendations. Do they have a website? Do they have a Facebook page? Look at their Instagram. Or, all those things kind of come into play when you hire someone.
Okay. And then the flip side of that, so I come to you and I've got a brand new business. Nothing started yet. What information do I need to be prepared to give to you or another accountant in our first meeting?
So you need to be able to describe your business. A lot of times I sit down with my clients, I say, tell me about your business. What's your goal? I mean, because you can have 5 people who own t-shirt companies who have totally 5 different plans.
Right.
And 5 different strategies. Because that helps me kind of make sure I'm building in your accounting the way that you need. Also, what is your preferred method of contact? What are your goals in the first 6 months? Have you opened up these bank accounts? Do you have money already set aside? Like, do you have a business loan that's already approved? Are you doing this on the side? So are you working full-time, for example? Is this a side business?
Right.
Also, are you going to be hiring employees? Which business licenses do you have? So are you LLC? Are you sole proprietor? Are you S Corp? Just kind of making sure that everything's set in place before you kind of hit the ground running.
Okay. So I want to talk about a couple things because this is such a big topic and you and I have had a lot of conversations about these things in the past. But when it comes to, let's say, sole proprietorship or LLC, because those are kind of the two main ones that our clients at least deal with, and most brand new small business owners, that's usually where they're going to start, unless they're very quickly going to become, a really big company. From an accounting point of view, or licensing, whatever, what really is the difference between being a sole proprietor and having an LLC, or is there a difference?
So the main difference is, if you're an LLC, it protects you. So, for example, if you go to any of these like mom and pop stores,
right,
they all should be LLCs. If someone
Okay.
goes into your convenience store, they slip and fall, they're sued, that person doesn't lose their house. So it's a protection shield having an LLC. However, if you commingle your funds, that protection is removed. A sole
Okay.
proprietor is pretty much, you have your business, maybe you're running an online business, or you don't have a lot of assets. If you're sued, they come after you directly. So that's really the main difference.
Okay. So you brought up a really good point. I wanted to get to that a little bit later, but since you brought it up, because you used the word commingling, can you explain what that is?
Yes.
And why that is not a good business practice at all?
Sure. So the number one thing that you should do when you first start your business, within the first 30 days, open up a business account. It takes 5 minutes for you to do online, 10 minutes for you to walk into any bank branch and get a business. As soon as you get your business license, you get your EIN number, you can set up a business account. It is very frowned upon by the IRS when you try to use your personal account for business purposes, because how do you know what's business? How do you know what's personal? And so when you're trying to figure out which is which, a lot of times you're not going to do it correctly. It's going to be really hard for an accountant to try to figure that out. Also, when you're an LLC, and this is really where it becomes really important, the whole purpose of an LLC is to protect you from liability.
Okay.
If you are continually mixing and matching your business account and using personal stuff, you're not treating your business like a business. If you're just kind of having a business and taking money for personal things all the time, you're not truly treating your business as a separate business.
Okay, but why does that matter? Because if you have a sole proprietorship or an LLC, right, all the taxes are considered the same. I do
Yes.
joint taxes. So if I have an LLC and that's making money,
Yes.
it's technically all my money. So why can't I just...
Because if you ever want to grow, and let's say you mom and pop store, so they have a convenience store, and this person wants to open up another convenience store, when you go to get a bank loan, they want to see what your business is doing. They don't
Okay.
want to see that you are going on Carnival Cruise or Disneyland with your business expenses.
Okay.
They want to know that you're treating your business like a business, that your goal is to now grow, that your goal, and that you're also making sound business decisions.
Okay.
So the main reason is because, yes, when you do your taxes, it is one and the same, but not really. There is a separate form. You have a Schedule C that you put all your business transactions on.
Okay.
So if you can't put your personal things on your Schedule C. That all ties into one big tax, your 1040,
Okay.
but your Schedule C is totally different. You don't put your personal items on there.
So for people that are a home-based business, so obviously the line there gets very blurry. It's very different when you go to your office and you've got a very specific office setup.
Yes.
So for somebody who's a home-based business, as just a good business practice, what's sort of the qualification for something being a personal expense or a business expense? So let's say, for example, I buy, a case of bottled water.
Yes.
Now, obviously, I'm probably not going to just use that for business or just use that personal.
Correct.
So where should that go?
So if you have a home-based business, you typically should have a home-based office. So your office is something that you only do for business, which is also a tax write-off.
Okay.
If you have your home-based business and also your kids are coming through and that kind of thing. But your home-based business is what you do. You go in there, you do your work. Anything that you buy for that. So if you buy plants or anything electricity, that's all home-based and that's a tax write-off. So that's where you keep that separate onto
Okay.
your business bank account. What I always suggest to people when you say the commingling thing is have an owner's draw. So I tell clients, okay, obviously you have your business, so let's
Okay.
look at what you're spending on your personal basis. Of course you need personal money to live your personal life. So let's look at it. Is it $3,000 a month? Okay, great. So once a month, let's transfer $3,000 from your business account to your personal account.
Okay.
Now you have a $3,000 to do as you please. It's a lot smarter to do that
Okay.
than to try to have in the same place, because what happens a lot of time, you and I go out to lunch after this. I treat you to lunch, we're having a business conversation, I'm giving you advice. That's business. But if I have that also my personal, you and I are friends, I can also take you out to lunch. Where do I how does it decide?
And that's my question.
That it's,
well, one of my questions.
Yeah, that how do I prove that, it's business versus personal? And that's a lot of times where the IRS is saying, well, you've been using, taking Rob out to lunch. How do I really know it's business? Well, let me make sure I keep this on my business account.
Okay.
If I go out personally with you, let's do that on the personal account. So I can show that I've been trying to do my due diligence to keep those two things separate.
So if somebody goes, so let's say somebody goes to Costco and they spend, several $100s. They buy business stuff and personal stuff. Should that be then two separate transactions? So should I pay for my business stuff on one way and my personal stuff on another? Or do I go home at the end and kind of highlight my business stuff? And again, I'm talking best practices here.
I mean, realistically, if you have, and this is where an accountant or bookkeeper comes in, very rarely does someone say, okay, here, let me use my business card, and then they come in either. What happens is, I have a client once a month, she brings me her receipt, she highlights if she ever does that, hey, these 5 transactions were personal.
Okay.
Keeping track of your bookkeeping, then I just transfer, okay, well, $2,500, $2,000 of that was for personal.
Okay.
So then I can put that to your owner's draw account. So I'm keeping track of what you use for your personal basis on that Costco receipt. And that's where it's important to also keep your receipts.
Okay.
So that's where it becomes important.
Okay. I want to switch gears a little bit because you talked about nobody wants to see you using your personal stuff for business, whatever. However, you can make, it's kind of weird, if you want to put, and this is something that took me a long time to get used to, money in your own business, there's a way to do that. You have to set yourself up, you basically loan yourself money and you pay yourself back with interest.
Yes.
Can you sort of put that in everyday terms so that it's a little easier to understand? Because I actually don't completely get it.
If you have an LLC, what you can do is write up a contract. So you want to make sure there's a contract in place where you write it out and say, okay, I, Rob or Phyllis, am loaning my LLC $5,000 to get started. I'm going to then every month transfer back $1,000 plus 12% interest until the loan is paid off.
Okay.
So it's booked like a loan on your business. So what you want to make sure is you kind of write that up and then you give yourself the money back. And you have it set so that it goes by the terms of what you have in the paperwork.
Now, do I need that notarized or anything like that, or do I just need it?
You need it. You want to make sure that you have a lawyer look over that.
Okay.
So it really depends on how your business is set up. So I would advise something like that. Just have like a legal shield or something of that nature. Just kind of glance and make sure that the terms are correct.
And can I set my interest rate at like 1% or 0.5% for 10 years, or is there a specific number that I need to kind of range that I need to keep that in?
So with that, I'm not an expert on that.
Okay.
So that's where I would say talk to a lawyer about that, because that kind of depends on how your business is going to be and realistically when you're going to be able to pay yourself back.
Okay. So what is your take on when you have business owners who really outsource their accounting or their financial side of their business to somebody else and really just want nothing to do with it? They don't want to see it. They just want their monthly whatever out of the business. Because I've come across a lot of people that have been really taken advantage of in this situation.
Yes.
Either from an accountant or a business partner or, and unfortunately those people are out there.
Yes.
How can people that really don't want to be involved in that part of their business, what can they do to make sure that they're still keeping themselves protected while, not really getting completely into it? So
I have clients that are like that. I have clients that are, every week we have a meeting. And then I have clients where, I hear from them for a month, if you have the right accountant bookkeeper, no matter what, they're going to send you a monthly profit and loss statement. Whether you look at it or not, they're going to send it to you just to let you know, hey, I'm keeping on top of everything. As a business owner, you have to understand this is your passion. You worked hard to start this business. So maybe you don't want to be involved in day-to-day, and you really shouldn't. The goal of a real accountant bookkeeper is they should be in the background while you should be working on what your passion is. But they should be reaching out to you. Hey, let's have a meeting once a quarter. Let's go over your numbers so that we can make sure we're on the same page.
Okay.
Because the worst thing to happen is that at the end of the year, you're surprised. Because what happens is you're not looking, you're thinking your accountant's taking care of everything's great. Now you're trying to go get a business loan, or you're thinking that you don't have to pay taxes because you may have a loss. And it's like, oh no, you have a profit of $10,000 that you have to pay taxes on.
Okay.
Or no, actually you have a $50,000 loss because you haven't been looking at it.
Okay.
So I would suggest, as a business owner, maybe you are busy, but just set it on your calendar once a quarter.
Okay.
And you say, you know what, I'm going to do this 1 hour once a quarter with my accountant bookkeeper to set up a phone call, a business meeting, face to face, whatever it is. Just go over everything so that everything doesn't get snowballed. Because it's a lot harder to play catch up for a year or a year and a half than it is just for 3 months.
As a general rule of thumb, you mentioned taxes or having the money to pay your taxes. So how much money, so revenue's coming in, is there a certain sort of percentage that is just a good idea to sort of put aside in the event that taxes come around and you do need to pay, or how does that work? Just so again, let's say there is a little bit of a surprise, but that surprise doesn't have to be a traumatic surprise. It can just be maybe a slight inconvenience.
Yes.
So what would you suggest?
So if you've already done your first year taxes, what happens is you have something called your estimated taxes. The IRS will automatically tell you, or your accountant bookkeeper will automatically calculate, you should be contributing, let's say, $1,500 every single quarter.
Okay.
If you do not pay your estimated taxes as deemed by the IRS, you'll get penalized when you do your taxes. So in your mind, you should already be saying, okay, you know what? I'm going to just every 3 months submit $1,000, $2,000, whatever the number is, to the IRS. When it is time for you to do your taxes, guess what? You include every single dollar that you contributed on your tax form, so that you're not surprised. So maybe you end up getting a refund of some of the money you contributed, which is a lot better than having to owe. Or maybe you didn't submit enough, but maybe you now owe maybe a couple $100 versus $10,000, $15,000.
Okay.
It's a lot easier to pay a little bit here and just kind of make it one of those just standard practices and procedures that you do, versus waiting to the end of the year and then also having to give the IRS a little extra money, which you don't want to in the first place, if you don't have to.
Okay, so one of the things that we come across here a lot at Nevada Business Opportunity Fund are new businesses. Let's say they've been around for a year, long enough to file taxes, and they need a business loan, and their business is doing well. However, on their taxes, they took certain deductions. Again, completely legal. Everything's above board. There's nothing wrong with it at all. However, their taxes say that they lost money. When actually maybe they had a $20,000 profit.
Yes.
How does that work, and how does a business owner know when that's a good idea or when they should not necessarily take all of those deductions maybe in one go?
That's a great question, because a lot of times when tax season comes around, I have different clients who have that issue. They say, okay, look, I want to buy a house next year. So I know that I can't write off everything. So you have to decide as a business owner what your goal is for the next year or two. If it is to get a business loan, if it is to purchase a car or to get a mortgage or something where you need to prove that you had some income, you can't take every single write-off, which is part of the benefit of having a business. But you can't do it. You're going to have to show some type of income, because when you are, especially an LLC, and you don't have a W-2 or anything like that, they're only looking at your business as money. And so in your brain, you've made $100,000. The loan people, they don't care about that. They want to see what your net income is, which is unfortunate sometimes. So
we're not allowed to take that, actually. We have to have something that says, okay, here's an actual number that you made.
Correct.
And if you filed it with the IRS,
it's out of your hands.
That's your income.
Right. So that's where I always tell people, you have to make a plan, and I call them a SMART plan, specific, measurable, attainable, realistic, time bound. What is your SMART plan for the next year or two? If you don't plan to get any loans, take as many write-offs as you possibly can to lower your tax liability, as long as they're legal. If you are planning to get a loan, you have to show some type of income. You will end up paying taxes on that. But if that's your goal, you have to decide that. Now, let's say someone's already did that. They've already taken this loss. They decide, hey, I want to get a loan.
That was going to be my question, actually.
What you can do is revise your taxes. So you go back, you sit down and look, okay, were some of these write-offs that I took, did I need to take them? So you can always, redo your taxes if that is your goal. Or what you do is you just wait another year. Okay, so you weren't able to do it this time. There's also other ways for you to get loans. So maybe you try to get a personal loan. Maybe you try to get a business credit card. It really depends on what amount. So you start setting yourself up in the place so that by next year, you're able to now do a loan. If you have a house, maybe you take equity out of that house. So in the meantime, you try to figure out different ways to go about that process.
And I'm assuming that if somebody does revise their taxes, there could very possibly be a situation now where you either have to return some of the money that was refunded, or end up having to pay money that you would have paid. So it's not a way around. I just want to make it it's not a way around paying money to the IRS.
No, if you got a refund, but now you want to buy a house and you need to show an income, and you revise it to show your income, you're going to end up having to send money. So that's where you want to make a decision, because you're going to send that money back to the IRS, and then you're going to also try to get this loan. But before you do any of that, make sure you sit down with a mortgage broker to know what number you need. Don't just revise your taxes and then you sit down with the mortgage person, they say, oh, well, this isn't enough. And now you have paid the IRS extra money. And now you also don't have a loan. So.
Thank you for that.
You're welcome.
So there's a few terms that get thrown around a lot here and with businesses. Especially when people come in for lending, we ask for things like profit and loss statements. We ask for things like balance sheets, cash flow statements, and things like that. Can you explain just what some of those are, and just to kind of sort of maybe demystify that a little bit?
So your income statement, also known as your profit and loss statement, pretty much says this: how much money did you bring in? How much money did you bring out? At the end of a month or any period that you set, did you have money left over? And what did you do with that money technically? So most of the time, that's your number one statement that you should be looking at all the time. Just to make it in easy layman terms, it's kind of like in your own personal life. Okay, you make $60,000 a year, $50,000 in expenses. You have $10,000 to then put into your retirement fund or something of that nature to spend. So that's kind of the same thing for your business. That's exactly what a profit and loss statement is. Your balance sheet looks at your assets and liabilities and your equity. So your assets is, what do you own? So if you own a restaurant and you have purchased this building, that's your asset. Your liability is, okay, well, most people don't have $500,000 just sitting around to purchase the building. They've taken out a loan to have that building. So you own the building. Your loan is your liability on that. And then your equity is, if you shut down your business tomorrow, would you actually get money out of your business, or would you owe people?
So if I have a small account, let's say consultancy business, similar to yours, where basically all you need is a laptop. Now, is that laptop an asset, a business asset, or is there a certain dollar value that says you're an asset and you're not an asset, as far as
So it depends on how much money you spend. So for an accounting or a consulting, marketing, services-based company, you're not going to have a lot of assets and liabilities. Your assets and liabilities, for the most part, is going to be, if you, like you said, a laptop, but it's a laptop that you spend like $3,000 on, and you're going to take a depreciation on. If you spent $500 on like a tablet, you're going to write that off in 1 year. So a lot of times, that's the difference, and that's a good question. There's two types of business. There's services, which are marketing and accounting, and there's not really, I'm not selling something to you. I don't need to go buy something to sell you what I'm offering. Then you have product-based companies. So for example, this dress that I have on, someone had to go get materials to actually then go sell this. So then that's where assets and liabilities and accounts payables and receivables come in.
So it's not just everything. So it's not everything the business owns isn't necessarily an asset when it comes to the balance sheet. Okay, cool.
And then the third one you said was cash flow statement. So as we know, cash is king. So the cash flow statement is a composite of your profit and loss statement and your balance sheet. So what it says is, right now I have $10,000 in my bank account. Let's look at what my actual income is for that one period. Let's say a month. Let's say it's $5,000. Let's look at what I invested in. Let's also look at any liabilities I have. So at the end of that period, what do I expect to have? If it's $5,000, or is it negative $10,000? So that's what your cash flow is how are you taking the money that you bring into your business, and how are you allocating it?
Okay. So you mentioned goals. You mentioned that a few times.
Yes.
do you actually work with your clients to help them set these, like, so if I was starting a business, would you sit down with me and say, okay, what are you looking to do in your business? Where do you want it to be in a year or even in 6 months? What about financially? Are you looking to buy a car? Are you saving for your child's college or something? Is that something that you work with, or just an accountant in general would actually work with? Or is that something I should come to you and say, hey, Phyllis, this is what I have, this is what I want, and you just run with that?
So that depends on what type of person or what type of business it is. For myself, that's what I do for my clients,
Okay.
just because I try to be a one-stop shop. Like I said, everyone has different goals, and everyone's at different periods in their life. I have
Okay.
clients who are a little bit older, and so maybe they work a full-time job and they've started another business on the side to boost up their retirement. So they want to take every dollar and just put it into a retirement business. You have some people who are just starting out, they're younger. Their goal is to build it into a $5 million company. So the whole point of really sitting down with an accountant is setting what is your goal for the next 6 months. Because this is going to help you set up a plan and to keep track of what you should be doing, how you should really be spending your money. Let's look at how you're hiring. Let's look at your marketing dollars, how you're spending them. Let's look at all these things, the money that you do have. Let's put it in retirement. Let's put it in a 401k plan. Because when you have your own business, that's one of the things that it's a little bit hard. You have to be really due diligent about what your long-term goals are, because no one's going to make you clock in and clock out,
right.
If you have your own business.
Okay. And is there a difference between, or let's say, an accountant that specializes in a brand new business versus somebody who works with, because once a business has been around for a little while, it's almost it's like a car, you're just kind of maintaining it, where in the beginning there's so many more uncertainties, and cash flow is really a big issue and everything's so up in the air. And obviously the way we plan to start our businesses and the way it is in reality, it's never the same. The two really half the time look nothing alike, other than the type of business you're in. So should a new business owner or an aspiring business owner reach out to a certain type of accountant, or is it basically just kind of all the same?
Definitely not all the same. I mean, it's kind of like if you decide to go buy a shirt, and that white t-shirt, you can go to Walmart and buy it, you can go to Target, or you can go to Nordstrom's. It's a white t-shirt at the end of the day.
Right.
It really, I would say, and this is just my own personal preference, you want to have someone who has an understanding of what you're doing.
Okay.
If you have an accountant that has never really owned their own business and doesn't understand the whole bigger picture, a lot of times you have an accountant who's just been laser focused on one type of accounting. They're not going to understand, going down to Nevada, getting the licenses and setting up a payroll and use tax and sales and use tax and all those things. You have accountants who they're expecting all that stuff to already be set up.
Okay.
And now they're just coming in to just, okay, cool, I'm just taking over where you set up and just kind of hit it running. Most business owners don't know how to do all that stuff. So they're looking for someone to be the expert in those things. So I would suggest having someone, like my background is, my MBA is in entrepreneurship management. So it is, those people who have all those questions and knowing how to figure out the answers. I have clients, I'm like, well, I'm really not sure about this, but they say you'll figure it out. And I do, because then it helps me for the next person. Okay, great. Now I know how to get this process done. So I think it's good when you start a new business to hire someone who's going to have knowledge of all of those things, and maybe not someone who doesn't know all those little things because they have never had to do them.
Okay. So I would like to hear from you, because you've had your own accounting business now for what, 2 years, 2.5 years?
Yeah,
2 years.
2 years, yeah.
What would you say are the top 3 mistakes that small business owners make when it comes to accounting? Like, what are really the 3 key things, and that maybe some of our viewers can actually avoid? And if you have any tips, if it's not obvious, of how to avoid that, how to avoid that.
3. Okay. I would say the first one is ignoring. I would say a lot of times the number one thing that small businesses or new companies, they don't do it. They just open a bank account, they start their business, they do nothing until it's tax season.
You mean nothing accounting wise?
Nothing accounting wise.
Okay.
They just are collecting money, they're putting it in the bank. Yay. they don't do anything until it's tax season. They don't do anything until they get a notice. They don't do anything until it's a necessity.
Okay.
A lot of times by then it's not too late, but it's a lot more time consuming.
Okay.
It's a lot more expensive. If you're trying to catch up on accounting in 1 year to do your taxes, you're going to pay a little bit more versus if you've been doing this year round.
Okay.
It's also costly because a lot of times you may have, let's say, spent money on Google advertising and you thought you turned it off, but it's only $100 a month. You're not looking at your bank account. So now you're just continually giving $100 to Google for no reason because you haven't been looking at your numbers.
Okay.
So I would say the number one thing people do is just ignore.
Okay.
The second mistake is,
Microphone.
sorry. I would say the second mistake is not setting goals.
Okay.
You're just running your business. That's great. You're just going along. But what's your end game? You know, in 5 years, where do you want to be?
Okay.
Are you just trying to just continually just keep going and just go and, you know, until you're just done? Are you trying to retire at some point? Do you want to pass this down to your child? Not setting goals, because if you don't set goals, you don't really know. You're just kind of just going.
Okay.
I would say the third thing is not looking at the information, or I think what a third mistake people
Well,
do.
what do you mean not looking at the information?
I would say a lot of times I have clients who, well, not clients, but a lot of people don't, they get their information. Okay, you have a bookkeeper, an accountant, they provide them with the information, but they don't want to make any business decisions on them.
Okay.
So for example, I may say, you know, your payroll is really, really high. You're spending 60% of your income on just payroll. And they, okay, great, that's great, you know. And it's like, but do you realize that that's a huge number? You know, maybe taking 10 minutes to really look and see, okay, is everyone clocking in properly? Do you have too many people? Is there a way to maybe have outside contractors to increase your income? Because any business is going to have a down.
Right.
And when things go down even a little bit, do you have things put in place? And so a lot of times what happens is people go down and now it's freak out, and now it's 60%. It's like, yeah,
Right.
you know, and so,
And then they fire half
and then
the
they
people.
fire half the people, and now that person's on Yelp saying, oh, they fired me with no notice and things of that nature. Whereas you could have already been making a plan to kind of maybe cut back on a couple of hours or try to make put better procedures in place.
Okay.
So those are the top three that I came up with quickly.
There you go. Well, thank you for that. Yeah, because I didn't give you a heads up on that one at all. So let's switch gears a little bit, because we've talked a lot about accounting. I want to talk a little bit about you.
Okay.
And because you started your business
In
2 years ago.
Yes, March.
In fact, yeah, I would say almost just over 2 years ago. So what are some of the, well, first off, why did you decide to start your business? Because obviously as an accountant, you know, you could work for a really big firm and at least in the beginning probably make a lot more money and have, you know, more glamorous, sexy clients out there.
I love my clients.
No, but you know what I mean?
Yeah.
You know, because, you know, when I worked in advertising and I got to work with, you know, big multinational names.
Yes.
That's nice.
Yes.
But I love what I do here, where I'm working with people that, you know, very small neighborhood businesses where people who live further than 2 miles are probably never going to hear of that business.
Yes.
And I love that.
Yes.
I love that. So why did you choose to go the entrepreneurial route and not, you know, into maybe some really cushy
Happy job.
position in a beautiful office?
Well, for myself, just growing up in the Bay Area, I always saw people owning their own businesses.
Okay.
My mother's side of the family, they own their own businesses. And so even growing up, you know, writing papers, it was like, I just want to do bookkeeping and accounting for small businesses. It was always a passion of mine. And so even when I graduated, I've only worked at one really large company, but for the most part, I've always liked working at small companies. I like knowing what I do makes a difference.
Okay.
And the one thing about me is I'm an accountant, but I've always wanted to say, okay, Rob, you're doing advertising. Well, how can I help you get to your goal? I've always wanted to look at the sales team. I've always wanted to look at the commission. So I've always been interested in the bigger picture. And so working at smaller companies, you kind of are able to kind of look at different aspects. The last company I worked at, I ended up being the finance, accounting. I was also over the customer service department. I was HR. I was also over marketing and IT.
Right.
So I've always kind of had to just not want to just do accounting. I'm also HR certified. I've also teaching certified. So I just always wanted to do a lot of different things.
Right.
So I've always just had a passion for small businesses. So I also like flexibility. I was working for myself for 2 years from home, and I just love the flexibility of being able to make your own decisions.
Okay.
So once I decided I was going to go for it, I gave myself a 6-year goal. It was going to be do this for 6 months. If it doesn't work out, go back to the job. You know, that's always there. But I never wanted to do the woulda, coulda, shoulda.
Okay.
And so I just love the aspect of working with someone and having that face-to-face interaction and sitting down with them. I have a client who owns a DJ shop. And just kind
DJ, like
he
the
does
jockey?
Yeah, it's pretty cool.
Cool.
Yeah. So he sells he teaches people how to DJ. He sells
DJ.
he sells records and things of that nature. And so kind of sitting down with him, making a plan, and now he just opened up another shop in Denver.
Awesome.
So helping him keeping track of his finances and, you know, giving him that information. He's been able to open there, and we applied to go on Shark Tank. So I mean, the passion behind working with people individually and knowing their, like, you know, helping them hit their goals versus working with a big corporation where you're just a number and you're like, okay, clock in, clock out. You know, I get excited for my clients and what they're trying to accomplish.
Well, I know you to be very passionate with your clients too. So, we met actually when you were really at that phase of, I want to start a business and I really don't know what to do. I don't know where to go. I don't know even what questions to ask.
Yes.
What was when you made that decision to go from, okay, I want to be in business for myself to being in business for myself, what was your biggest fear, hurdle, or obstacle, and how did you either overcome that or just barge through that? I mean, what did you do?
Well, my biggest fear is I do not like networking. I'm a very big introvert. And so when you start your business, you have to figure out what your biggest weakness is.
Right.
You know, okay, I'm great with this, this, and this, but that's great. But my biggest weakness is I'm a big introvert. You know, I don't like selling myself unless I'm in a job interview. So when I decided, I knew, well, I have to get clients. No one's just going to just trip over Phyllis Johnson and say, oh, you know, hey, you want to do my accounting? You know. And so when I decided to make that decision, I signed up for every seminar possible. Okay. You know, my background's entrepreneurship management. That's great to go to school for it, to actually do it is totally different. And so actually one of the classes I signed up for was with you, with the Nevada Women's Business Center. And I just came in and I met you, and it was amazing. And you actually connected me with Laura, and I did QuickBooks training there. And so I started just kind of pushing myself out there. Let me go network. Let me just put yourself out there to conquer your biggest fear. And then once I started meeting different people, I started getting advice from them. Okay. And so once you start getting advice, you start to kind of break out of your shell and start to conquer your biggest weakness. So that was what I started to do.
Fear of networking, since you brought that up, and I actually didn't know that was one of your things, because I know you to just be this person who seems like you can talk to anybody, anytime, anywhere about anything.
Thank you. See, practice.
So for people that really do have that fear of networking, and I come across that, I'm going to say probably 95% of people that at least come through our doors are, I'm not even going to say they don't like networking, it's frightening.
Yes.
What do you do that kind of eases that for you or makes it easier for you? Like if you could give 1 or 2 tips to people.
Sure. So I'm good one-on-one. So what someone actually told me who's great at networking, she said, find 1 or 2 people and realize you don't have to talk to everybody. So you don't have to talk to everyone, but number 1, set a goal. So when any networking event that you go to, say I want to hand out 3 business cards. Is this going to kill me to talk to 3 people? And you just set that goal and you know, go in there, you practice. You know, maybe you talk to yourself, have a conversation, and just go and just set an hour timer. You know, it's 1 hour out your life. And know that your goal is, I want to grow my business. I want to make connections. Okay. And then you just, it's you know, at first a little nervous.
So if we were at an event and you did not know me, how do you initiate? Because this is what I hear too. People are fine once that
Initial?
Once that contact is made and once the chatting starts, people are fine.
Yes.
It's that initial introduction.
Yes.
So what is your, what's your tip for that?
You find something that you like about the person. So two things. Either you've researched the person before, which is what I used to do. You know, there's a site called meetup.com. So I would find out, oh, Rob's advertising and he's traveled. We talked about Africa, for example. So, oh, hey, Rob, it's nice to meet you. I heard that you were going on a trip to Africa. You know, you try to not just immediately launch into your business. You try to build a rapport with the person first. So maybe you compliment someone on their dress, or maybe you have read an article about the person. Compliment someone first. That's a beautiful icebreaker. Even, hey, you know, oh, what are you drinking? Oh, you have that iPhone. Oh, yeah, mine just broke yesterday. Icebreaker is just make the other person feel comfortable. Make them want to talk to you. You know, the worst thing you could do is just say, hi, my name is Phyllis. I own an accounting business. Oh, let me get your business card. Okay.
I don't know about you, but as soon as I know at a networking event, people are going to either try to sell me something or they're going to want something from me.
Yes. And I
know that, but I don't want somebody coming up with the, oh, so what do you do?
Yeah.
Or, you know, starting out with, oh, you work there, I need to meet with you. That doesn't really...
Correct.
I'll do it because that's just part of what I do.
Yes.
But that's very different than when somebody kind of comes up, we're having a really cool conversation, and then it sort of turns to, hey, let's meet up for coffee because I think we really have a great opportunity to collaborate or add value or work together or something like that.
Correct. And a lot of times, that person may not need your business. Someone may already have an accountant. That's great. But you know what? They may need you for something else. For example, you know, Laura had me do training. They may keep you in mind for something else, or maybe they have another person. So every person, don't take it personal. Every person that you meet is not going to buy your service or your product. So treat it as like someone that you're building a friendship with, a long-term friendship with.
And what would you say was your biggest surprise, good or bad? Let's start with the negative surprise. When you started really genuinely started out on your own. It's like you were doing things, you had clients. What was kind of your was there anything that popped out that sort of caught you off guard or that surprised you from a negative side?
Probably a negative side, I think.
Well, I mean,
maybe the pushiness of
we're not mentioning any names here, so you know. I'm just curious.
I would think one of the things is maybe my surprise of people not caring about their business sometimes. I had a client who, and I realized that I can't care more about your business than you do. He was continually getting IRS notices.
I remember we talked about I remember.
And I would set up meetings with the IRS, which is not easy to do. I would set up meetings with the Sales and Use Tax Board, also not that simple. And he would just miss the meetings, and I would get irritated. I'm like, oh, I did all this, and it was just like, oh, I went to lunch or dinner, and I would see him down the street, and I'm like, I realized that I can't work with anyone who's not as excited as their business. I can't be more passionate about your business. And so what ended up happening was he started wiping out his bank account. And then he's calling me panic. And I'm like, I can't do anything now. Once you've hit the point where the IRS is wiping out your bank account, there's only so much that I can do at that point. And so he ended up losing his business, selling it, for dirt cheap to someone. Because he, and then I found out some other stuff that I won't mention. But that was probably the biggest surprise is, man, starting a business is not easy, And so when you're not that excited about it and, I mean, why get to the point where you are, it's just that was probably my biggest shock.
So, flip side of that, what was your sort of biggest, really good surprise? Like, wow, I had no idea that was going to happen. Was there one?
I realized that there are a lot of, how many entrepreneurs are in Las Vegas. I think that was my biggest thing. When you're working a day job, you don't get a chance to kind of in the middle of the day sit down with someone like yourself. You don't get a chance to realize just how much of a network or why, everything's all connected. I was telling Kathleen, I was watching the thing yesterday and I saw Roz, who was for a short time my accountability partner. And just kind of seeing the link between how small Vegas is, but how the entrepreneurship, everyone kind of knows everyone. And just that is kind of a great situation.
Yeah, I don't know your experience, but my experience, especially in the entrepreneurial community, everybody's, I'd say a good 85 to 90% of people are so willing and ready to help.
Yes.
To give advice, to recommend people, to make those connections. That's been my experience, at least here with the Women's Business Center. Everybody just seems so open,
yes.
yeah, to really helping. But you have to ask.
Yes.
And when somebody offers, you have to take them up on that offer.
Yes.
So.
Yes.
So, okay, so we're pretty much coming to the end.
Okay.
So how do people get a hold of you?
Okay. So if you're more interested in my services, you can give me a call. My phone number is 702-420-2408. My website is www.pkjconsulting.com, info@PKJ Consulting. You can also find me at Facebook under that name. I'm also on Instagram and LinkedIn under Phyllis Johnson.
And in case you missed that, you can always give us a call and we will be happy to get you in touch with Phyllis. So that basically wraps up this part of the webinar. Just again, a quick reminder for anybody that needs help with business plans, marketing plans, financial projections, some accounting things, or funding for your business, you can go to our website, www.nevadawbc.com, or you can give us a call here at our office at 702-734-3555. And that wraps up today. Thanks for joining us. Thank you so much, Phyllis, for taking time out of your day.
Thank you for having me.
Always great to see you.
Thank you.
And thanks for all the really good accounting advice.
Well, thank you very much.
Thanks.
Thank you.
Thank you.